Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Nasdaq's second annual Retail Investor Study attempts to examine factors shaping financial activity to understand what appeals to key segments of the retail investor community. With these insights, ETP issuers, financial advisors, and asset managers can unlock the potential of each investor segment and personalize outreach strategy accordingly. Joining me for Financial Literacy Month to discuss ETFs and retail investor behavior is Danielle Rutsky, ETF Senior Product Manager at Nasdaq. It is great to see you as always. Welcome back to Trade Talks.
Thank you.
And Danielle, how are retail investors interacting with ETFs, and how has that changed since last year's survey?
So last year, only 15% of retail investors had over $5,000 invested in ETFs, while this year, almost 15% of retail investors have over $250,000 in ETFs. Stocks, mutual funds, and ETFs are more popular in personal brokerages than individual bonds, crypto, or options. However, there is still room for ETFs to grow more, as 27% of non-users said they would consider them in the future. Also, familiarity was slightly up with ETFs, especially for Gen Zers and lower income retail investors.
What types of ETFs are retail investors trending towards, and how does this compare to the overall ETF market?
Retail interest was highest for fully transparent active and passive ETFs. And while the transparent active space has continued to have more new launches than passive, passive had 6 times actives inflows in 2022. Also corresponding with their rising retail interest, smart beta and defined outcome flows grew last year. And of these, younger generations preferred passive and smart beta strategies, while later generations preferred active and defined outcome strategies. Overall, the most high interesting one was broader sector-based ETFs.
What data points are retail investors relying on when they do their analysis?
ETF data-driven considerations include fund performance expectations and history, which are still most important to these investors. But AUM, or assets under management, is actually one of the lowest and declined year over year. Also, liquidities and tracking errors, already lower importance, declined, while standard deviations importance increased in 2022. So this shows that investors could benefit from education on how an ETF's spread and tracking error can impact an investor's execution and holding experience, and therefore return.
What themes are we seeing for these investments, and how does that correlate with the industry?
Financial technology and real estate were still the most popular ETF themes for retail investors. However, the fintech space is still relatively concentrated with only a handful of ETFs, so this could be a potential growth area. Contrastingly, it was the 3rd largest year for real estate ETF new launches, but flows varied by product. Also, there was a shift in retail interest from ESG and cryptocurrency or digital assets towards robotics and automated technology, foreshadowing robotics and AI's switch to positive flows so far in 2023. Also, ESG did see a decline of 35% in new launches, but did have positive flows in 2022, while digital economy saw higher new launches, but experienced outflows, though the pace of those outflows has slowed so far in 2023. And these survey trends were even more pronounced for users of financial advisors, and over half of each age demographic recorded that they use an advisor.
All right, interesting. Thanks, Danielle. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.